Dear viewers, you are most welcome. Dr. Vijay on accounting, lecture number 17. In the last lecture, we have seen how a final account, that is trading and profit loss account, emerges automatically on closing the nominal accounts and how the final account itself is closed finally. In this lecture, we discuss more about final account, its formats and formulae. Then we study about post-closing trial balance and balance sheet. Why the name balance sheet, its format and structure. It familiarizes the student with the current and fixed assets, current and term liabilities, etc. Let us go to slide 2. All stages in final account are shown under a common heading. Balance at each stage is brought down to the next stage. And it continues. Final account of a single owner firm need only to have two stages, that is trading account and profit loss account. Trading account gives the gross result of the trading operation, gross profit or gross loss, and that is brought down, and then profit loss account is done. Expenses and losses are shown in the debit side in all stages in final account and incomes and gains on the credit side. Now look at the formula regarding trading account. Trading account shows gross profit or gross loss. That is equal to net sales minus cost of goods sold. Net sales equals gross sales minus sales returns. Net purchases is purchases minus purchase returns. Now cost of goods sold equals opening stock of goods traded, that is a stock at the beginning, plus net purchases for the period, plus direct expense of purchase for the period like wages paid for unloading, carriage and freight inwards, insurance charges for freight inwards, etc., minus closing stock. I am telling once again, cost of goods sold equals opening stock of goods traded plus net purchases for the period plus direct expense for purchase for the period minus closing stock. And gross profit, gross loss equals net sales minus cost of goods sold. The equations stated above are worked out in the following format in trading account. Let us go to slide 3. Format of trading account is given in slide 3. The title is common for the whole final account as you have seen. Trading and profit loss account of Sabu's firm for the month ended 31st January 2020. In expenditures and losses in the debit side and incomes and gains on the credit side. Trading account starts with opening stock of goods. Below that, purchases minus purchase returns, that is net purchases. And then below that, direct expense of purchase. All direct expenses, whatever, wages paid for unloading goods, freight and carriage and insurance charges of goods purchased, the expense of cleaning and sorting and grading the goods to improve saleability, local taxes on purchase or transportation of goods, all expenses connected with purchases and making the goods fit for sale. On the credit side, first item is sales minus sales returns, that is net sales, and then comes closing stock goods as per stock valuation. We have seen gross profit equals net sales minus cost of goods sold. How the cost of goods sold is shown here, please note. First is opening stock of goods plus net purchases plus direct expenses minus closing stock of goods. Okay, that is cost of goods sold. Sales minus cost of goods sold is gross profit, and this is the way how items are shown in trading account. The final result, if credit side is total is high, then gross profit. If debit side total is higher, then gross loss. That will be brought down, and then profit loss account will continue. Slide 4 shows the format of profit loss account. As we have seen, the whole final account is shown under a common title. Each further stage is done in continuation of the balance brought down from previous stage. Gross profit or gross loss is brought down and profit loss account follows. The formula is net profit or net loss equals gross profit or gross loss plus all incomes and gains of revenue nature other than sales minus all expenditures and loss of administration, marketing and selling of goods and losses on fixed assets of revenue nature as depreciation, receivables not realizable, etc. etc. That is, net profit equals gross profit plus all incomes and gains of revenue nature other than sales, which is shown on trading account credit side, minus all expenditures and losses other than expenditures and loss of purchase, which was shown in trading account debit side. That is, expenditure and loss of administration, marketing, selling, and loss on fixed assets like depreciation, receivables, loss on realization of receivables, etc. etc. Okay. Slide 5 shows the format of profit loss account. Gross profit, if brought down from trading account, it will come in credit side, and gross loss will come in debit side. In debit side, below gross profit, all the expenses and losses of administration, selling, and expense on assets like depreciation, repairs, and losses like bad debts, etc. are shown. On the credit side, all incomes and gains other than sales. Sales is shown on trading account credit side, we know. All other incomes and gains are shown on the credit side. And we find out the balance finally. It will be net profit or net loss. Whatever it is transferred to capital account, and thereby final account is closed. Items are normally shown in the order of the amount involved, starting with the highest item. Losses and provisions are shown after the expenditures in debit side. On the credit side, incomes are shown after gross profit, followed by gains in the same order. All additions and deductions required in any item are exhibited in the inner column. Slide 6 shows the trading account of Sabu's firm. In the debit side, the first item is opening stock of goods in trade, $36,000. And below that, purchases minus purchase returns. And then wages. Wages is only direct expenditure connected with purchases in the problem. On the credit side, sales minus sales returns is the first item, and then closing stock and trade. We get a gross profit of $72,100, and that is brought down to profit loss account. Slide 7 shows profit loss account of Sabu's firm. Gross profit is brought down on the credit side, $72,100. It is followed by incomes, interest from bank account $400, commission income due from Meadow $640, discount received $600, interest on drawings $100. In the debit side, salaries is first item, and outstanding salaries $12,000 is added, it becomes $20,000. Bank charges next item $3,200. Interest on loan $2,250. Local taxes then, and from it prepaid portion is deducted, so $333 only in outside. Bad debt $6,000 is next item. Discount allowed $800. Depreciation return of $383 comes then. Interest on capital, and finally two provisions. Provision for bad debts and provision for discounts. The net profit which is transferred to capital account is $34,226. Thereby the final account closes. Schedule of debtors and creditors. Slide 8. In trading firms, before preparing final trial balance, there is practice of preparing schedules of debtors and creditors. Only the scheduled totals are shown in the trial balance. Schedule of debtors is a list of amounts receivable from various customers to whom goods are sold on credit. The aggregate amount as per the list is sundry debtors or total receivables. Schedule of creditors is a list of amounts payable to the suppliers from whom goods are bought on credit. The aggregate is sundry creditors or total payables. In the present case of Sabu, on 31st January 20, the Sun debtors is only Jameson Company $47,000 and Khan Brothers $45,000, and so Sun debtors is $92,000. The creditors is only one item, Georgie Traders, that is $21,300. Post-closing trial balance is prepared after doing the final account. As all the nominal accounts are closed and even final accounts is closed by transferring the profit or loss to capital account, the trial balance will show only asset accounts, liability accounts and capital account. Only balance of assets, liabilities and capital. The accounts which are not closed by transferring to final account or otherwise. The post-closing trial balance of Sabu's firm is shown below. It is tallying, and so there is no arithmetical errors in the books of Sabu after preparing final account. See the post-closing trial balance of Sabu's firm on 31st January 2020 after preparing the final accounts. In debit side, cash in hand, local taxes prepaid, commission due from Meadows, sundry debtors, furniture and fittings, and stock in trade, closing stock in trade. These are all assets. The credit balance are outstanding salaries, provision for bad debts, provision for discount, loan from Asad Bank, sundry creditors, capital account balance after adding profit, and bank overdraft. This trial balance is tallying. Why balance sheet is called as balance sheet? Balance sheet shows the financial position, that is position of assets, liabilities and capital of the firm on the last day of the accounting period. So, also known as position statement. The sheet shows the balance of the accounts which are brought on the books of the subsequent period. Hence, the name balance sheet. After closing nominal accounts by transferring the balances standing in them to final account, and closing final account by transferring the net profit, net loss to capital account, or other reserves and funds, only the real and personal accounts do show any balance. Such balances can only be brought forward to the respective accounts in the subsequent period. Slide 12 gives more information about balance sheet. In the balance sheet, all the assets are shown on one side and all the liabilities and capital account on the other side. Totals of both the sides do tally, rendering the equation assets equals liabilities plus capital true. The liability side shows the source of funds invested in assets, how much of the owner and how much borrowed, and the patterns of borrowing. The asset side exhibits the pattern of investment of the funds in various assets as on the closing date of the accounting period. While doing balance sheet conventionally, all the workings are shown in detail in order to make it more revealing. Assets are classified into current assets and fixed assets. Liabilities are classified into current and long-term liabilities. Capital account is shown in detail, stating clearly all the items causing increase or decrease in it. Slide 13 is the last slide in this lecture. Please subscribe if you are not subscribed so far. Share maximum possible to whoever wants to learn accounting. Your comments and likes are welcome. This slide shows the balance sheet of Sabu's firm on 31st January 2020. On the one side, left-hand side, it is assets and properties, divided into current assets and fixed assets. Current assets are cash in hand 27,950, two miscellaneous items, local taxes prepaid 1,667 and commission due from Meadows 640, and then receivables or debtors 92,000 less provisions for bad debts and for discount. Net amount is 85,652. The last item is stock in trade or inventory, closing stock 30,000. The major current assets are cash, receivables and inventory. Here the total comes to $1,45,909. Then comes fixed assets. Furniture and fittings 23,000 is only item. Less depreciation, the net amount is 22,617. On the right hand side, there is liabilities and capital. Liabilities are divided into current liabilities and term liabilities. Current liabilities are outstanding salaries 12,000, Joji traders creditors 21,300 and bank overdraft 18,500. Total current liabilities is 51,800. Then comes term liabilities. It is only one item, loan from Asad Bank 14,000. And next comes capital. In capital account, opening balance plus the rectifications, 2 items of rectifications comes to 75,000. Then interest on capital is added. Net profit 34,226 added. And then interest on drawings and drawings subtracted. The closing balance is 1,02,726. The balance sheet is tallying on both sides. It is 1,68,526. The lecture concludes. Thank you for your participation.